All right, guys, welcome to the Independent Investor Channel live stream. My name is Ryan. Had a great discussion before we popped on here live. I had Gen X Dividend Investor, and I had I had Brandon Jones in the thread as well, who had some awesome questions for me. For you guys that are new to the live stream, typically I throw down on Friday evenings at 9 o'clock. That's typically the most frequent time for me. That's what I've been doing ever since I've been doing live streams back when folks were not doing live streams on YouTube. So for you guys that are making your way to the live stream for the first time, I'd like to, on behalf of the channel and on behalf of myself, I'd like to welcome you. I'd like to welcome you also on behalf of this fine community that we have. I'll just go out on a limb and say that it's probably the finest investing niche community that you'll find on YouTube, okay, bar none. And this particular offering is just a small aspect of trying to bring people together. Once a week, we typically get together and we discuss investing topics. Now, there's a lot of different YouTube channels out there. There's a lot of different opportunities out there. If you are seeking out an opportunity and want to be told and promised riches overnight, this is not the channel for you. So you can go ahead and tune off if you'd like. What we have is a sample representation of a bunch of different people that are deploying a lot of different strategies. One thing that I can tell you, though, is this community is dead set serious on getting ahead, okay? And that right there, if I was going to outline a common thread, there's a ton of folks in this community that make their money in a lot of different ways. But I think one thing that is admirable and one thing that I've been able to pick up and really take away from this group is that we're all looking to get ahead, number one, okay? Number two is that there's not a perfect investor in this group, okay? So this is a group full of a bunch of human beings, all right? These are a bunch of folks that lead normal lives as well, okay? I don't think there's a whole lot of folks in here that do YouTube exclusively. If they are, that's lovely and wonderful for you. I don't know if there's any possible way I could do YouTube. I do YouTube live stream once a week, and that, quite frankly, is about all I want to do. This is a topic that is extremely important to me. The reason is, in my interaction with people really want to invest and save for their future, but they don't have the first clue on where to start. They really fear themselves and they fear the prospect of getting off track and making a bad decision. And I think that lingering fear or barrier to entry is such that a lot of people fear that there's decisions out there that could lead them so far astray that they could lose a significant amount of their nest egg and their net worth, okay? Now, I'll be the first to tell you that investing in the stock market is a serious matter, okay? You're not going to have me come online and jump up and down and put on a clown suit for you and entertain you in harmony with this topic. I won't do that, okay? So again, if you're looking to be entertained, I'm not the channel for you, okay? If you are looking to actually build wealth, that indirectly is a byproduct of listening and deploying sound financial fundamental strategies, okay, that have been proven to work over time. We typically like to revolve around two specific strategies. The first being passive investing, okay, very simple. If you've heard the term, you understand what that is, okay? It'll come up in topic of discussion this evening as well. The second being dividend growth investing, okay? You can succeed with both, okay? You can also find some not so successful times in both, okay? If everybody had all the answers, there wouldn't be a need to come on and discuss this topic with a bunch of like-minded folks, again, who are trying to get ahead, and they're trying to get ahead deploying a number of different strategies. But I can tell you this, the strategies that I've been able to observe over YouTube for the people that I respect and the people who are truly trying to build wealth in the correct manner are doing so using either of the two strategies, whether it be passive investing or dividend growth investing. Okay. So we're typically revolving around some of our wonderful index fund ETF products that are available out there for typically our newer investors that really just want to get started in the market that can do a lot of different things for you. We'll talk a little bit more about that in depth as we get into the live stream tonight. The second being dividend growth investing, okay? And typically the dividend growth investing topic revolves around entering into some of those blue chip companies that we're all familiar with, but you may not have considered them to be a viable investment option for you, okay? So connecting the dots between you and how you can, in the straightest line possible, seek out your exposure in a manner that makes sense for you. Okay. Investing is not one of those things that you're going to introduce yourself to, and then come Tuesday when the market opens up, you're going to know everything that you need to know. Okay. So, contrary to some of the sidetracked messages that you might find not only online, but on YouTube specifically, okay, give yourself a fighting chance. Give yourself a fighting chance to be critical of the information that you get online. Okay, that's number one. All right. Your instincts will probably provide you the best level of pause. Okay. Sometimes the best thing to do is just pause and say, hold on a second. That sounds really good. That sounds like something that I could actually deploy in my own strategy. Okay. Take a little time to research that. Now, there's a difference between when you're deliberating about going from a non-investor to an investor. There are things that you can do that are very, very non-impactual. There's a lot of different things that you can do in way of self-study that will cost you no money. All right. Some of those things that I would fit into this category, number one would be to get a hold of some investing books to understand the scope of investing, why you invest. That'll help you with some of the things that we talk about on the channel with regard to identifying some of your long-term goals, asking yourself, why do I want to invest? What is my risk tolerance? What is risk tolerance to start? Okay. Getting some of those preliminary questions asked and answered are free of charge, but it's a deliberation that you have to go through. Okay. You can watch as much YouTube as you want. Okay. But at the end of the day, the success that you're going to render in your pocketbook or in your investment account is not going to be by nature of osmosis. It's going to be by nature of the fact that you listened, learned, deliberated, put to action some of these things that we talk about for yourself. Okay. It's not going to be however much Graham Stephan content you can consume, and then automatically you're going to fall over and trip and fall into your lotus. It's not going to work that way. All right. So, again, if you want that type of entertainment, you're welcome to go elsewhere. All right. For those that actually find their way to the message and they are looking to walk through this deliberation, let me tell you first and foremost, okay, investing is an extremely rewarding and humbling activity. It's something that I believe everybody should do. It's something that I say everybody should do, and I say that tongue in cheek, knowing that very few will actually do it. Okay. There will be many, many more that will talk about the importance of investing. There will be a ton more people say that they will get started in investing. But it's amazing to me how very few people, for whatever reasons, some legitimate, some personal barriers, get into their own way and will never actually enter into the investing game. Okay. Now, most of the channel creators that you'll find in the group here, I've seen a bunch of them pop in. I've got Quest to Fire here in the group. I definitely want to give her a shout out. Within the first 10 minutes, I got it. So thank you. I had to get off of my soapbox for just a second. But Quest to Fire is in the group. We've got a great sampling of investing YouTube channel creators. That just gives a different layer of expertise So Quest to Fire, if you're new to the live stream, I would ask that you get your feelers out, because that's an intangible benefit to becoming part of this community, is that you get to rub shoulders with some of these folks that have very large portfolios, or they are just starting out. And there is absolutely beautiful information that can come out of either one of those situations. All right. You may take something from the beginning investor that you can really relate to. You may take something from the more seasoned investor that you can relate and deploy for yourself. That in and of itself is the key. If you're one of those folks that sit back and you are extremely uh, questioning about why you're seeking out some sort of investing information over YouTube, get over that. Okay. The times are changing with regard to how people are seeking out their exposure to the stock market. Now, the unique niche on the independent investor channel has been, quite frankly, and very, very simply, to exploit the opportunity of investing on your own. Now, for a lot of people, that's doubly difficult to consume. All right. But the quicker you can get on board and understand that the landscape, the investing opportunity has become so conducive to individual investors that if you do not get on board right now, you're going to look back on this opportunity and it's going to be like, I wish I would have invested in Amazon. Okay. Because this program is so powerful. The idea of direct connecting yourself in the stock market cannot be overlooked. You can deliberate all day about what type of investor you want to be. All right. You can succeed as a growth investor. I've got Ryan Giffen in the group. Congratulations to you. The baby's beautiful. Tell you and your wife, congratulations, you guys. That was fabulous, man. Really, really cool. And that actually reminds me, if you guys want to follow some of this community, quite honestly, I do consider it a community. I use that word all the time. You're going to want to pick up some of the sources of some of these folks on Instagram as well. I typically try to channel my Instagram to be a little bit more personal in nature, because quite frankly, if you're going to take one little iota of advice or some idea about investing, I would actually feel a little bit more comfortable knowing a little bit more about who the heck is putting this through the airwaves. Let's make one thing very, very crystal clear. Okay. Most of these channel creators, they don't need to do this. Okay. And that's one common thread, is that a lot of these folks, especially each of my channel creators, minus one, do YouTube as a side hustle. They are looking to share their message. They're looking to share how they've been able to define their own personal investing strategy for themselves. And for you guys as new investors, it's lovely to sit across from somebody and be like, wow, this is amazing. Okay, which it is. Investing for the majority of people is scary as hell. It scares them right off. They don't even want to talk about it. Okay. This is one of many barriers that I'm looking to blow right through, because from my perspective, that should not exist for people. And it absolutely does. All right. So congratulations to Ryan Giffen, another channel creator you're going to want to kick over and help support if you're viewing the live stream after we post it to YouTube. I've got my good friend J Mac Investing, Dividend Growth. He's popped in the group, another phenomenal channel creator, actually just an example, a success story on YouTube, quite frankly. Somebody who came on and wanted to share his personal journey, and doing a great job. And he did a collaboration with me kind of right away, when he was a relatively small channel. Now he's enormous. He's blowing up. He's huge. At least he plays the concert like he's a big channel. But I tell you what, he's got unlimited upside potential at JMac Investing. So you're going to want to kick over and help support his message as well. He's a friend of mine as well. And we'll do anything to support JMac Investing. Right below's got GW Life, TV Investing Retirement Life. And I don't know if I stepped on, I don't know if he's doing a live stream tonight. You guys got to understand a little bit. When I started doing this live stream thing, nobody in God's green earth was doing it. Okay. It just felt like the right thing. Yeah. So that's what we were doing, because it gave me the opportunity to reach multiple people. I see my good friend here, Ben, US vet, in the group. Appreciate you popping on. A shout out for sure from East Coast to West Coast. And that's the power of this message, right? You don't have to hear every word that I say, nor do you have to hear and deploy every word that I say. It doesn't work that way. The quicker you can get it into your head that investing is not going to be something that you're going to be able to learn overnight. What you do need to resonate with is, as long as you can understand that your evolution as an investor is going to take a freaking lifetime. Let me say it again. Your evolution as an investor is going to take a lifetime. It's going to be part of you. It's going to influence your decisions. You don't think that Ryan Giffen now is going to look at the world through a different lens with a new baby? I did. I did. So it's a lot more than just tuning into a YouTube channel and saying, wow, this is amazing. If I invest in this stock, I'm going to be up 20%. If that's your shallow need of a particular YouTube opportunity, again, it's not for you, okay? Because I tend to really try to drive home that if you are part of this community, you're going to get support from a lot of different angles, a lot. Where you've got a real serious guy like me, you can kick over and find a passive income investor, okay, and get a ton of energy, right? Somebody who's in their mid to upper 20s, right, who's just hustling to get ahead. And it falls in line with one of those themes that I talked about. There's nobody in this community that isn't trying to make a better life for themselves. And if somebody's doing that, then you're in my book, man, for sure. It's legit. Got a lot of respect for that, because I see a guy like Kyle on Passive Income Investor, and I don't know if I've said this before, but watching him reminds me kind of me in the passion when you're at that age and you're like, you know what, I really need to get it. I need to get on, man. You need to get on as of like yesterday. Like, don't be complacent about your program. Okay. There's always more information out there. So you don't have the opportunity to be complacent on this gig. You got a lot of work to do. So get to work. Okay. Not to quote my stock market movie, Wall Street, man, for sure. But Travis Williams is in here for sure. Travis is another channel creator. I'm earmarking these folks for you guys so you can go in and help support their message. Honestly, it really helps getting these different perspectives. And again, what I want you to take away from these other channel creators, at least what I take, is I'm trying to understand what type of investor they are. And that's what helps me. And if you think for a second that I come on here and I offer the live stream to say this is my way or the highway, again, it goes back to my point, man. Nobody's got this thing figured out. Okay. I'd like to talk to the person who thinks that they've got it all figured out. And there's a few of them on YouTube, and they're welcome to come on here and rap with the Independent Investor channel. I'll have them on and they can sit next to the chair for me during an actual collaboration. They're welcome to come on and tell us how great they are for sure. Investing with Aaron is in the group as well, another channel creator. Awesome to see you, my friend. Very, very cool. Thank you so much for coming on and helping join the live stream. Obviously, the Friday got pushed, guys. So if you're not following on Instagram, please just kick over and hit follow us on Instagram. It's an easy way to get those updates on the channel. I do the best I can. I really do. But that was family night last night. I'm deaf. I'm straight up. I'm legally deaf, but that's all right. Had some hearing protection anyway, but I had a great time. And it was a nice break for me for sure. But I did feel like I was missing out. I really do enjoy the live stream opportunity to come on and rap with you fine folks for sure, as I do feel like I'm part of this community. So if you're new to the message, you should feel that way as well. And that's why I say congratulations. I will not apologize. You make yourself a part of this community, and having some investing success is going to be, quite frankly, a byproduct of joining this fine community, because we don't wish that upon people. We expect it. All right. Yeah. Making profits, especially when the stock market's doing this, is it's an expected byproduct of deploying a good, sound investing program for yourself. So focus fire investing as well. I've got Jamie in the group here, who's a lot like me, coming from the same cloth, the same background. His investing strategy is awesome, and I guarantee his message is getting through to people. So just another perspective if you want to kick on as well. He's a big advocate of the Roth as well as me. Tax protecting money. Again, there's only so many options that you have out there when you're selecting your broker, when you're selecting the type of style of investing that you're looking to deploy. I know in the discussion that I was having before the live stream with Gen X Dividend Investor, I had a new investor kick on the thread here, which was super, super enjoyable. It was Brandon Jones who kicked on and was talking about switching strategies back and forth and trying to find his. That's a normal progression, guys. So if you're looking to go through this deliberation, don't think for a second that you're going to trip and fall on the right answer. Okay. What we can do is we can recommend that you go through as much self-study as you can, full well knowing that there is no perfect investor out there. Okay. There is no perfect portfolio. We do the best we can to seek out our exposure to the stock market in a way that's going to put us in line with our age, respective to our investing time horizon, reflective of our risk tolerance. It's going to be reflective of our style. I've already mentioned a couple of the styles. And when we get into the style and you say, you know what, I'm not quite ready for single stock, Ryan, well, that really helps eliminate one of the best styles I think is out there. Okay. If there was a different style of investing, trust me, this group would find it. Okay. All right. So that's why we mention dividend growth investing as one of those styles. 75% of my equities portfolio in my Roths are set up as a dividend growth portfolio. The other 25%, I contend, is the other aspect, and it does appeal to a lot of new investors who, yes, may have that fear, but they've got over that fear of entering into the stock market and they want to enter into some passive vehicles. There's only so many that you can look at. Okay. Index funds and ETFs are your two options that you can look at. Okay. That's going to get it done for you. In my particular portfolio, I seek out my exposure via VYMI, which is the domestic dividend payer. It's got about 400 holdings in there. VYMI is the international high dividend yielder, which has a little over 900 holdings in that ETF. So you can see there that passive style that I'm trying to put to work in my portfolio gets me both international and domestic exposure to that higher dividend yield. Okay. So keep in mind, I've crafted my style over time, and I do have my S&P exposure in another aspect of my portfolio in my thrift savings plan, which is kind of like my 401k. All right. But that allows me to seek out a little bit more dividend appreciation within the tax protection of the Roth. Okay. And also some passive bases in developed markets as well as emerging markets, as I do contend that if you were looking to define your style, don't just stop with the US markets. Okay. If you want to stay US centric, by all means, go ahead and do that. I just think you're missing out on some potential for some global diversification in your portfolio. Why do that? Okay. It doesn't mean just because you're from the US thinking that US stocks are going to outperform for the next 20, 30 years. Okay. There have been times in history where European markets have actually outperformed, and nobody's looking there right now. Nobody's looking at emerging markets. Okay. So you can seek out your exposure passively using the ETF product. Now, it comes down to, once you've defined your passive program, then you can kind of look and say, well, a lot of different brokers shop the same products. So I know there's a lot of different brokers that are thrown out there in the community. if you're a new investor, don't be overwhelmed, okay? Don't be overwhelmed. This is one of those things that I talk about that's not going to cost you a thing, okay? If you start a broker with Charles Schwab, for example, or you start a brokerage with Fidelity, if you start a brokerage with M1 Finance, okay, don't think that one is significantly better than the other. All right. Starting an account is going to cost you $0. Zero. And that can really be your first step in proving to yourself that you're serious about the investing game. Okay. So not only have you walked through the deliberation, okay, right on, man, I'm 34 years old. Now I'm going to start to get serious about my program. I found this YouTube community. I don't know. It sounds pretty good. It sounds too good to be true. And you know what they say about that, right? Avoid it like the plague. There's no way in hell I can get investing ideas through YouTube. Retool your level of thinking. Okay. I would put this community niche against anybody. Okay. With regard to honing over some of the best ideas about how wealth is generated in the stock market. We typically try to revolve around, we try to temper Ryan Giffen a lot on putting his entire investing nest egg into Tesla. Oh, just kidding. He's a passive investor just like everybody, but we look at the entire landscape. Okay. Don't think for a second that we don't offer and talk about Amazon when the time is right, or Google or Facebook, some of the social media platforms, cloud play like CRM Salesforce or Adobe Systems, some of the payments, MasterCard, American Express, Visa, and PayPal. Okay. We search the landscape for every opportunity. We do. I'll tell you what we don't do. We don't typically spend a lot of discussion talking about penny stock investing, okay? Because even though you can make money there, whoop-de-doo, whoop-de-doo, I think it's a waste of time, all right? So if you're a new investor and you're tuning into a YouTube channel and they're charismatic and they're selling the fact that they make money selling penny stocks, good luck, because at the end of the day, we can't save everybody. If you're going to get caught up in the temptation and the allure of those programs, okay, it's probably just going to sidetrack you for an amount of time. And the quicker you can come around to the fact that value investing, all right, looking at the value lists like the Dow Jones 30 or the Dividend Aristocrats list or the Dividend Kings list, that should be your world of work if you're looking to search out stock investing. Okay. If you're looking to search out passive investing, you don't need a whole lot of experience to enter into that. What you need is a little bit of wherewithal with regard to the accounts that you could potentially open and help you, whether it be a taxable brokerage account, Robinhood be an example of that. Okay. You can get a taxable brokerage account with any brokerage out there, Merrill Edge, Fidelity, Vanguard. I'm with Merrill. A lot of folks in the community are with M1 Finance, as I am as well. You can do taxable accounts through them, no problem at all. I typically try to contend that a new investor should look at the prospects of contributing to a Roth IRA if they are in fact eligible to do so. If you heard what I just said, you'll be more the wiser for it, as the majority of my wealth is actually tax protected within the confines of a retirement account. That's just the way I roll. You guys can roll however you want to. All right. So guys, thank you so much. I really appreciate the latitude on the Friday live stream. I guess I missed out on the group coming in here anyway. That's kind of cool to know. We are starting something somewhat special. You guys know that I've been collaborating with other channel creators. We will continue to roll out that opportunity, but there are times when I want to come on here and get a ton of stuff off my chest. There's a reason why I do that. I typically give my shout outs within 10 minutes to the channel creators. Then I'll spend the rest of my time speaking to the YouTube mic as if I've got a new investor sitting across from me, not commenting, listening by themselves or with their spouse. And they're listening and they're wanting to know what that next best thing is that I'm going to say to potentially motivate them to make that next step to empower their financial future. That is a responsibility that I take on willingly. It's a responsibility that I take on with full acknowledgement to know how powerful that can be. There's a real reason why I'm looking to leverage this YouTube opportunity, and it's not to grow my YouTube channel. Do I think my YouTube channel could use a little bit of work on the subscriber base? I do. Do I deserve 100,000 subscribers? I do. You bet. But here's the thing. I probably give up a lot by coming on once a week for 2 hours and speaking on a live stream basis to those investors. Why do I do that? Because nobody else does it. All right. So I'm fine. All right. I'm approaching $500,000, well over $1 million net worth. Okay. I don't have to do this, but I do it because I love it. I love it. There was some substantiation that came through the channel a couple weeks ago with a subscriber from Washington, D.C., who actually jumped on with me. And it was pretty cool to hear how the message is received. Sometimes the YouTube opportunity can be somewhat one way. And sometimes we deliver the message in a vacuum. You really don't know the impact of your message until you get that shot out back to you and say, hey, absolutely, we are listening. So I intermittently want to provide the opportunity on this live stream by myself. I do. And I will welcome any of the channel creators and subscribers back to the message. What you're going to need to do is you're just going to need to stay tuned to the notifications when I put them out, typically a couple days in advance. If you have a few moments to come on during a collaborative setting and further this discussion with me, you are cordially invited to do so. I absolutely love the opportunity to learn and evolve because I don't know, perhaps maybe I'm one of the few channel creators that'll come on and talk about the amount of experience that I have in the stock market. But you'll never, ever hear me talk about being a perfect investor. I've learned way more from this opportunity than you will ever, ever know. And hopefully the learning and the evolution is reciprocated, right? So if you are that new investor and you're sitting out there and you're looking to consume this stuff and you're really looking to deploy a strategy for yourself, it has to make sense for you, not me, you. It has to make sense for you. Okay. It's going to be your program. It's not going to be Ryan's with the Independent Investor channel. It's not going to be Jeremy with the Financial Education channel. It's not going to be Graham Stephan's program. It's not going to be Gen X Dividend Investors program. It's going to be yours. It's going to be yours. All right. And if it has $1,000 or $1,400 when you start that, by God, that's the most special account. Why? Because it's none of the aforementioned people's. It's yours. It's yours. That's what makes it special. You got to grow that stuff organically. You got to learn how to fund it. You got to learn how to grow it. And the beauty of it is as you're growing your own program, okay, you've set that seed. You haven't seen it break through the surface yet. You've planted the seed. You've gone from a non-investor to an investor. Now the beauty is that you can sit back because you've done that preliminary work to get that seed planted in the ground. Okay. Then you can turn into folks like me and extract a touch of motivation, etc., whatever, blah, blah, blah. If you don't like me, again, I apologize. I'm the same ornery fellow when I'm away from YouTube. So don't expect that I'm going to be something different when I'm away from this. You can get an in-depth technical review from a channel like Gen X Dividend Investor and really see how the deliberation on the stock analysis side of the house can work. Do you have to memorize all that stuff or become a stock analyst overnight? Of course not. Of course not. You can tune into a JMac investing and be like, wow, right on, man. JMac's working with going on 35,000 in that portfolio. That's legit. I want to get there, Those are the types of things that you can tune in to YouTube and get a little bit more support by becoming part of this community. The other option, okay, is the status quo. The way that most people, the community that I'm trying to break into, and that is the white collar, middle class, don't want to take any advice from anybody other than a licensed professional. Okay. That's the hardest group for us to break into. All right. If you think that going in once or at most twice a year to your financial planner and getting some sort of quick pill, investing pill shoved down your throat to be brought back up to speed about how your financial future is going, you're crazy. You're crazy. Investing doesn't work that way. Another common theme in the group here is that investing is part of every one of our lives, whether or not we like it or not. Okay. All right. I invest for a lot of different reasons. Okay. Financial support for the family, the kids, etc. I don't just invest to invest. There's absolutely a strategic goal or multiple goals in place with every single one of the positions that I take, the positions, the amount that I take, the name, right? Why is Johnson and Johnson my biggest holding? There's a reason for it, okay? It's so I can look my kids in the face and say, you know what? Dad did as much diligence as he could before he entered this position. It's tax protected. Enjoy it and understand why I did it, when I could do it. All right? That's the key, guys. Right on. So I just want to thank again. I've shot out a couple times indirectly, but a direct shout out for the conversation with Gen X dividend investor. I have not checked out the Pepsi video yet. I will. I watch all Gen X's videos. Why do I do that? Well, because they're freaking phenomenal. That's why they're freaking phenomenal. Okay. So, just another aspect, not a small aspect of this community that I think a ton of us are benefiting from in how Gen X seeks out the exposure to the stock market. I've also been catching some of Hidden Freedom Investing, who is also in the group here. Dave with Hidden Freedom Investing, also phenomenal, making money in a very unique way, that of which I would like to learn a little bit more about. I don't know how he does that with the real estate notes, but intriguing enough. See, here's the thing. To join this community, it costs you nothing. But what I said at the top of the stream, I freaking meant it. Okay. This is just one small aspect. I believe that at least the independent investor channel was part of a small niche of a community when I first started. But now that we've kind of grown, I think 2019, if nothing else, there was a ton of intangibles for me through this YouTube opportunity to be brought to some of these fine folks through the channel opportunity. And that for me is one of those things that I place on a pedestal when I'm evaluating the value that I'm getting through this YouTube opportunity. And I would expect that you guys do the same as well, especially if you're a subscriber making your way to the opportunity for sure, man. We'll get you there and we'll get you there collectively. That's the cool thing about it for sure. So I'm going to kick down here to the bottom of the thread, guys. It's like a scroll, man. It's super long. But I do want to try to work my way up and try to address some of these folks in the group. I did have Matt Money as well pop in here, and not to give Matt Money his shot out at minute 38. I had quite a few actually rock in here to the group. And Matt was another guy that I met in 2019 working with about a $500,000 portfolio, right? I say that tongue in cheek because I typically try to glean from Matt what style of investing works for him. And that's a cool thing for a new investor to sit across from somebody and be like, right on, man, that's awesome. How are you seeking your exposure? Right on, that makes sense. Or hey, maybe that doesn't make so much sense for me. Just another opportunity to consume some content if you are hungry for this information. I don't watch as much content as I should. I'm guilty, straight up. I'll come on and just admit that over the live stream. That's fine. I'm pretty darn busy with my affiliation. That's one thing I don't talk about very often, and that will continue. But if you guys don't think I'm busy in my other life, you've got another thing coming, man. You really do. So I typically am pretty tired once it comes around to Friday, but nonetheless, we deliver the message, and I'm usually pretty fired up after we're all done. So my name is Steve Rogers. Just popped in here, man. I just went over 100 to the message for the first time on my own. I had the great help of Matt Money last time. So I said it was the Matt effect, man. Matt helped me boost it over the top last time. That's the first time. And that freaking feels good, man. That feels good. I've got a lot of time on this project. You guys got to understand. And if nothing else, I would ask you to enjoy it with me. Certainly an ambassador of the message of investing on your own, man. And for the few thousand people that hear it out, um, we can all have our cocktail on the private island someday, because I tell you what, we're not looking this to screw around and just be part of a community. We're not doing that. We're doing it to render some freaking real results. There's no doubt in my mind that's exactly what we're doing. High expense ETFs and index funds can have their place if they prove they are making that extra yield. Yeah, so in response to that question, I typically compare it to my old school roots, man, of mutual funds. And I can dig and pull out all kinds of stuff from the closet, the skeletons, man, and from the archives of stories. But the one that typically comes to my mind is remembering looking at the statement that walked me through. I think the S&P was up like 8% or so that year. And I looked at my American funds through Edward Jones, and they were down that year. I did everything that I was supposed to do. I dollar cost averaged them. I invested on a cycle for 12 months straight on the T, boom, held it for the entire year, did not do anything. And I was actually down in an up year in the market where the S&P did on an average what it's supposed to do, rendered 8%, right? And that was typically the beginning of the end for me when I started to pay more attention to that stuff. And I would contend that there's a lot of people out there that were just like me and that are still to this day naive to the fact that they're paying way too much in fees. Okay. I will tell you this, the expense that I'm looking to get from the market from an ETF perspective, 0.03 on the low end. By no means that's just not expensive. That's relatively cheap. Fidelity has got some no fee ETF opportunities out there. So seeking your opportunity passively in the market, finding those ETFs and index funds that are extremely low cost, almost as close to nothing, they're out there. Okay. So I'm not really sure about the high fee stuff that you're talking about, the products out there. I typically try to focus on, I do a good job of covering Vanguard, and Jason does a good job of covering Fidelity. And then we've got everybody else in the group here who probably has their own personal preferences and favorites. But yeah, I typically try to mull over in my tab on my computer right now. I have the Vanguard's ETF list. You'd be hard pressed to go into that list of 72 products and find anything over 0.35 of an expense. That's the highest that I pay, and that's for the VYMI, but that renders 4% on that ETF. So choose wisely. We'll help you get there, no problem at all. But those passively managed ETF and index funds, you can choose however you want to seek your exposure there between those two products. But relatively speaking, they're both extremely inexpensive. Okay. And I'm not really one of those folks that advocate for mutual funds anymore, just because if you're going to enter into and become a passive investor, you're probably going to do well for yourself. Just keeping track with the benchmark. That's what the product is meant to do. Okay. The secret. All right. So we can go back and forth all day about, high fee index and ETF, et cetera. I'd like to know where you're pulling that data from. My stuff is extremely inexpensive. Vanguard is phenomenal, as well as Fidelity, great products out there. I think the key really that gets missed a lot of the times is to take those low cost or no cost assets via single stock and jamming those into a retirement account. Okay. Some of the higher income earners, man, the folks that want to retire at 32, there's a bunch of those folks. I think Matt Money actually is on track to probably retire at 33, and I will be at that freaking party. You betcha. I will have some. What's his drink? I think it's scotch. Does he drink scotch? I think so. I send him a bottle of scotch because he actually may be on track to retire at 33. I don't say that joking. I don't. I just I typically try to help new investors who are, just because they think they find their way to investing at 18 years old, that automatically their goal needs to be to retire at 33. He would agree with me on this, okay? And Matt's got a good job. One of those intangible things that you have to take into consideration when you're deliberating about how much you can invest, what style of investor you want to be, et cetera, et cetera. But again, I don't want to invite everybody to Matt's retirement party when he's 33, but I'll be there. I'm going to invite myself, so I'll be there. He'll be happy what level of bottle I bring to him for sure. Can't smoke no Cubans though, Matt. Sorry about that. I can't do it. So anyway, Steve's in the group, man. Steve's the gentleman that I was speaking about too, who actually really helped with that validation a couple weeks ago. It was pretty awesome. Since I have a Vanguard account, the only reason I choose mutual funds over ETFs is the microtransactions. Sure enough, man, and certainly it doesn't help to split hairs. I think what we're talking about are all phenomenal products. I just think that the nature of how you seek out your exposure, what I mean by that is how you put those products to work via the account that you choose, is absolutely going to change your tax implication. Number one, number two, your how the product acts. Okay. And your accessibility to those products. Some people enjoy index fund investing because they are, in fact, less accessible. A lot of people, I would just caught wind of a new channel that came on, investing with Rose, and it's a really good channel. She's phenomenal. I think she's a certified finance major. She's super smart. Great message. And she did a great job in talking about the difference between index and ETFs, and actually pointed that out as a reason not to invest in ETFs, because they are too accessible to investors. So you kind of hide the equity from yourself, which I kind of had to smile a little bit, because that would work for me for sure. Just keeping it away from myself. I'm up 10%, and it's like, boom, I want to hit the sell button, lock in some profits, and try to swing trade the S&P 500. But it's fair to each his own for sure, about how you seek out all good options for sure. Oh man, that coffee's freaking good. It's freaking good. You guys have got these whiskeys. Quest of Fire says whiskey for me. Yeah, exactly. Yeah, good. Enjoy it. I start drinking whiskey on the live stream, and I start to get to about minute 30, and I start to feel like I don't know. I can't think about stock anymore. I can just think about having a drink. Matt Ryan's bringing you a fine bottle of military special. Ha ha ha. Yeah, it's really freaking funny there. Funny man, Jamie. That's real freaking funny. You got to reach down underneath the shelf. That's where they keep that military special. If you guys don't know what he's talking about, that's the lovely stuff that they sell a half gallon for like $5.75. Yeah, like the 75 cents makes a whole hell of a lot of difference. But yeah, nobody but the hardcore people drink that. I'm not one. So so Ryan K says rum and Pepsi. I love it. Great stuff, man. Good. It's nice to know you guys are enjoying yourself. You might as well. I talk serious. At the same token, man, I can also say life is all good. It is all good. It's all good. All good is in the group tonight. And investing can be a super fun thing, man. I can't imagine life without investing. I really can't. I can't invest, and I don't come from money. I guess I wouldn't be the person that I am if I didn't have to build it and grind it out, you know? And it's the same thing with this YouTube opportunity. I don't think it would have been right for me to just come out with a viral video and pick up 100,000 subscribers. That's not my way. I'm a grinder. I do it my way. I come on here, and the algorithm doesn't know what to do with my stuff, because I have about a 20-minute average view time. I only have the hardcore people who want to learn stick with me for the entire 2 hours that I'll throw down on this live stream every week. So 22 minutes, and it falls about 22 minutes average duration, which is kind of interesting to me. I really do read between the lines on that. But the algorithm kills me, because, if you can't get people to sit and watch your entire video You are hurt on search, um, which is fine. I give that up because, quite frankly, I don't want to sit across from people who don't want to hear this. I don't. I could care less. I don't. I just could care less. And I know there's a ton of people out there, man, and I don't discriminate. There's people who make their way to my message who are coming from places that I wouldn't even want to venture to guess whether or not you could succeed or fail at investing. But we put out the opportunity nonetheless equally. Doesn't matter who you are. And the measure of worth for me is your willingness to do it. That's it. I find that everybody comes from a different walk of life. Everybody comes from a different perspective. Everybody's got their idea about how they're going to make riches in the stock market. And it's amazing how many people come and tell me how they're going to do blah, 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 blah. And they're going to do all this stuff. And it's like, yep, up, da, 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 and it's lip service. And it's just like, when do you ever want to put any of this into action? Okay. It takes a whole heck of a lot to sit there and talk about how you're awesome and you're going to do it this way, or everybody else is doing it wrong, right? And you don't do a squat for your own program, right? So, really trying to further the discussion and make investing so much more accessible for people. And I don't know, man, the big institutions are making it awfully tempting. They really are. I'm monitoring my affiliation with both First Trade and M1 Finance extremely close, and don't think for a second that I won't trim the fat on the Independent Investor channel. All right. M1 Finance looks like it's a crowd favorite for a lot of people. Absolutely. But we've hit slight of a lull. I thought we would have a lot more people come to First Trade, and we did initially. But I think people who are seeking out First Trade now are doing it for their options program right now, as they are extremely competitive. But we'll continue to monitor those two opportunities through the channel, and we will adjust accordingly. I have no qualms about this. Again, I don't do YouTube to put food on the table. All right. Good stuff. All right, let me cruise up here, and I want to see if I can't cherry pick some of these. Steve T, really, Adrian, check Vanguard or Fidelity. So Steve T is re-emphasizing what I said through the stream there. I wasn't sure. Yeah, unless they're lying on my expense, but those expense ratios are anemic at best. They're extremely small. 0.03 all the way up to mine. Most expensive one, the Spiders, I pay 0.10. Vanguard's real estate specialty ETF is 0.12. It's the most expensive one. Emerging markets, I think, is a little bit more on the expensive side, maybe 0.15. And then the VYMI, I think, is the most expensive one that I have, I believe, at 0.30. Okay, so very acceptable for them to bundle up the product and jam it into my retirement account. I'm happy. Thank you, Vanguard, very much. I appreciate that. I'll probably owe them a bottle someday too, as well. But nonetheless, we're good. Adrian Sicardo, I noticed some ETFs are more expensive than their comparable mutual fund index, sometimes even double the price. Interesting. I'd like to know where those coming from. All great suggestions. Good. I'm cruising up here. So Brandon Jones, the new investor. So Brandon is the one that said that he's changed strategy a few times. VOO, VTI, VT, VNQ, VNQI. Okay, so listen, there are 72 options off of the Vanguard's ETF site. Don't catch an independent investor channel and take the information literally. The S&P 500 is a great way to seek out your exposure to the S&P 500. Is that the end all be all to your investment journey? It doesn't need to be. Okay. My whole point to this is, could it be a very good first asset to own? Yes, it could. Okay. But don't stop working there. Fund it up for a while. Get it up to that first $5,000 or $10,000. Then look to expand upon that. Maybe add that small cap offering in there. You're going to find VB in that same list. That's the small cap blend. That's going to give you a mixture of growth and value within the same product. Okay. I own it myself. All right. And then look to diversify internationally if that's what you want to do. Look to put some emerging markets in there, all good options, all in the listing of ETFs. Again, it comes back to this. Don't tune into the channel or any of these other channel creators and be like, what are they doing? What makes sense to them? I'm going to make what makes sense to them make sense for me. That is not the investing message we're looking to put through. What we're looking to do is strike up a discussion where you sit back for 2 seconds and say, hold on a second. Ryan looked over my 5 offerings in the stream, which are great. I own one, I own VNQ, I own VTI and VOO. I've owned on and off here and there. I own it now. The real takeaway is to get yourself on the Vanguard's ETF list, then cross compare with Fidelity and pick those ETFs that are going to fit your profile. Now, you don't have to pick ETFs, plural. Pick the one that's going to give you the broadest exposure to the market, the biggest bang for your buck, give you the most opportunity to get used of fluctuation of your money. And for me, I would contend that if I could go back and buy one, it would be the S&P 500. That's all. Okay. That's what you need to take away. But it's not going to be right for everybody that tunes into the channel, because if you're going through the proper deliberation, what is my income? How much can I invest? How secure is my job? Do I own real estate? Do I have insurance if something happens to myself? How is my credit posture? How is my cash savings fitness? Okay, these are all things that you need to answer. So if you want me just to carpet bomb an answer and say, yep, the VOO is good for everybody, I won't do that. Okay, because it's not. That's not the truth. The truth is people need to understand the underlying thought process behind how I look at, once you've gone through all of those 60 questions of deliberation before, and you feel like you're at a place where you can step into the market and grab some exposure. Now the fun part is building the portfolio. That's the fun part. But I can tell you what's not fun: trying to build a portfolio when you're ill prepared to do so. That you're going to set yourself up for some real heartache, and you're going to end up changing programs back and forth because you've entered into assets that you're not really sure how they perform. You're not really sure if they are in line with your own investor profile. Okay. And it's just better to go through that deliberation. Building the portfolio itself it's the last thing that you do. All right. Now, you guys, explain to me the irony in why the YouTube community always starts with, right? And I'm guilty of this too. What are the 20 stock picks for 2020? Right? Guilty. Okay. That's an attempt to put a portfolio in front of people before they've gone through the all important deliberation of asking all of the important questions that I talked about. Are you even tolerant to the market? Do you have the ability to understand the importance of investing insofar as watching your accounts and watching your money fluctuate? Okay. The reason why we hit so hard on this right now is because if you haven't paid attention to the stock market, it's on fire. I just gave you a Ron White. It's on freaking fire. Okay. Now I don't have a scotch to take a drink of, but it's on freaking fire. Okay. Now, this is typically the time when everybody looks at the stock market and they're like, whoop-de-doo, leapity-doo da day. I'm going to jump in and I'm going to be an investor right now. Look at the excitement on my face. Does this look like excitement? Okay. Yeah, we've made money. Everybody in this community who was an investor before 2019 or before have made money. Okay. Let me tell you what the common thread of everybody in this community: if the stock market goes down, we're all going to lose money. Okay. Let me refresh. All right. All of our portfolios are going to adjust back. The question is, what is your tolerance to watch that type of activity? If your tolerance is such to where it's untested and you don't trust yourself, start with scale. Okay. Start with an amount of money that makes sense. Don't be surprised when your money acts like invested dollars. When they act like invested dollars, why should you not be surprised? Because you've asked them to behave like invested dollars. So the trick is to find that amount of money and get that and only that amount of money exposed to the market, that of which you are comfortable with watching fluctuate in value from day in to day out. You can sleep easy. Okay. Congratulations, you're an investor, but you're not so over levered to the market that you're laying in bed at night chewing your freaking fingernails because you're so worried about your money going to zero every day. Guys, it's no way to live. It's no way to live. And if you have a tolerance that is an extremely moderate to low tolerance to the stock market, don't invest. Seriously, don't do that to yourself. Because if you're ill prepared and you don't have the level of support that you need, but you know how important it is to invest, that's where a community like this can really come into play. All right. If you're a young investor, there's so much experience in this group. There's so much value in coming on and spending a few minutes. These are minutes. Okay. I'm a little bit older, so I know the value of time. And I know for the folks in their early 20s, I know they value their time too and their time at the bar. Okay. I understand Friday night is very difficult to par yourself away from going clubbing with your friends to come and watch a super boring guy talk about finances. But here's the thing. There's nothing really boring about that private island. Okay. There's nothing really boring about me throwing out a comment to talk about Matt Money retiring at 34. That to me is amazing. Yeah, it's not boring. So spend your time accordingly. For the folks that make their way onto the live stream, absolutely. They've already self-justified it for themselves. And a lot of these people in the thread, I feel like I know them for sure. There's a lot of people in the thread that I'm getting used to knowing that I don't know. But I can rest assured say this. If they've been with the channel for any defined amount of time, I can tell you one thing. If they've listened at all, they are winning. They're winning in the stock market. Winning. Win, win, win. And they're doing it not for me. They're doing it for themselves. That's the beauty of it. Have a drink. Yeah, you betcha. It's exciting stuff, man. It's a great, great topic. And, we're going to continue to roll out the message. The channel is going to continue to grow and evolve with me. And we will all continue to grow and evolve together. Quite frankly, for the few thousand loyal subscribers that I have on the message, I wouldn't trade that relationship for nothing. No way. For the lucky people, okay? And I know everybody looks at the subscriber number and they're like, wow, maybe this guy doesn't know what he's talking about. Maybe I'm going to kick over to a financial education channel because it's got an enormous channel. He must know what he's talking about, okay? It probably falls in the definition of groupthink, just about as best as I can explain it. Yeah, yeah, definitely. Yeah, the value that can be gleaned from a channel has really nothing to do with what I just explained. Nothing. Okay. Because again, I contend that if you have paid attention in some form or fashion, you've probably taken some of these wealth building strategies that are not rocket science and you've deployed them for yourself for your own financial future. And that's the beauty of it. That's the full circle. And is when we're taking some of these awesome wealth building principles and we're deploying those for your families. That's legit. It's really powerful stuff, man. And hopefully you guys are having some fun and taking some it's very self-fulfilling to finally find the opportunity with investing and have it make sense for you. Because what I talked about at the top of the live stream, do you realize how many or how few people actually understand what it is that you have the capability of understanding by being part of this community? It's life changing. It's the one word that I say all the time, and it's empowering. That's the beauty of it. Okay. Very few people understand how empowering this information on. I have no business, me personally, I have no business having the net worth that I have, not with the income that I have. Right. I just had a comment through the channel a couple weeks ago saying, what gives, Ryan? What's the deal, man? You got a sugar mama? I, I had to laugh. Nah, I don't. My wife doesn't work, but it's a single income family, right? And, you know, I look back and I say, well, okay, nothing's been perfect, right? There's been some rocky road, the whole way, and there's been some pitfalls along the way as well. But I think for a lot of people, man, if they can just take away and say, man, alive, if I can just make investing half of the priority that Ryan does, and I say that tongue in cheek, man, I just pay the hell attention. That's it. All right. I don't go around with my day thinking about all the stuff that I feel is somewhat shallow in this life. I do really I could just do what it is that I do with my day-to-day living into retirement and just be a happy person. I really am. It has nothing to do with me building up and amassing a net worth and then spending my retirement spending all of my net worth. Okay. That's not the way I envision life being for me. I don't. I envision life being a one way road, and I'm going as fast as I can possibly go on that one way road, never to look back with regret. I've never. I just want to keep going and going and going and affect as many people as I can possibly affect. And the people who have come across me, or maybe people in this community, they can say, man, alive, that was one of the coolest things I've ever been a part of. Right. All right. I didn't join this community. I thought initially maybe I can join this community because I heard good things and I could just listen and succeed by osmosis. But then I found out that the requirement was such that I actually had to take action. Yeah, you could actually do real stuff, take real action, real deliberation, real self assessment. Start a real investing account. Start an investing account that's actually going to work for you. Take real dollars and have real confidence to know that those dollars are going to work for you in the best manner into your future, right? Real work and real dollars. And you'll find out really, really quick that when I do those portfolio reviews and you tune into them and you're just like, wow, that's awesome. I want that. How let me watch the video again and make sure Ryan didn't tell me how I could get the portfolio that he has. Okay. You got to read below the line. You got to read below the surface. You got to get the fundamental piece. You got to hear that takeaway. You can't hear the takeaway of a $500,000 net worth. You can't hear that. You have to hear, I started with $1,500. That's what you got to hear. You got to hear how much I started with on my dollar cost average program, which is 25 bucks. Wow, that's amazing. I've got $1,400 sitting aside and I can afford $25. As a matter of fact, Ryan sucks, man. I can do $100 a month. I've got good money coming in, right? That's what you need to hear from the message, okay? Don't sit there and look at these large portfolios like some of the folks in the group. It's a luxury to have some of these folks in the community, man. And that's why I always give my shout outs to folks like Matt and Gen X and Jason, some of these folks that are coming on and they're sharing their story with people. They don't have to do that, okay? It's a beautiful thing, but make sure that you're taking the deliberate steps to work toward that level of financial security as opposed to just dreaming about it and not taking the very first step toward it. That's why we look to break down our goals. Okay. I always cringe when I have an 18-year-old come to the channel and they're like, Ryan, what do I need to do to retire at 33? Well, hell, I don't know. I'm 42. I must be 10 years behind schedule. Again, with my philosophy and perspective on life, I probably am not the right one to help you. Okay. Because I don't want to be the one. Look, the people who can actually become financially free. Like, here's the thing. I've gotten to know Matt over the last, couple months anyway. And Matt's not going to stop working. That's the irony, is that people have a different perspective about what they feel like retirement is going to be. I'd like to know Matt's perspective on this. Maybe he envisions, smoking Cubans and drinking. I don't think that's the case. I think he works hard and I think he plays hard, and that's a good thing, but aspiring to retire at 33 so you can bump around in your Ferrari, I don't know. Good luck to you on that. It's not really in line with what I want. um, and I've never really prescribed to that type of mentality anyway. If you could prescribe to get up to that first $10,000, and then you come to me and you're like, Ryan, I set a financial goal of making $10,000 and I did it, I will be the first to congratulate you. I really do. Because for all the people who come to me, hundreds of people throughout the course of the channel, and they're just like, how do I get to $1 million, Ryan? How do I retire early, Ryan? How do I retire early, Ryan? For all those people, very, very few. Tim Tellers is in the group, and he's one of these ones I'm going to call out. Very few have come back and said, Ryan, I heard you on setting realistic financial goals, and I made it to that first 10,000 bucks. And I don't think I would have done it if I didn't have you saying, hey, this is a realistic goal. Go get it. Okay. Amazing. The irony in that very scenario. Amazing to me. If you just stop and think about it for a couple seconds, you can kind of see what makes the most sense going after realistic goals. You'll be so much more happy that you did. So much more, man. I've got comments just popping in here. Holy smokes, man. I wish I could have this dictated to me. Matt is the boss. I like that. So right now it's Lisa. I got Lydia just popped in here as well. Right on, man. And Lydia's just reestablished a portfolio after working on and going through some deliberation of her own, which is really cool. Wanted to reduce an auto loan, a truck loan, and got great taste in automobiles, I might add, but wanted to take care of the car payment. And now the market is conducive to doing stuff like that. I just had another good conversation this morning with one of my subscribers, and it's just like, Ryan, what do you think about me putting an extra payment toward my house payment right now? Awesome. Why do you need to be in sixth gear right now with regard to the stock market? If it feels right to you to try to pay down your mortgage and really try to get a good chunk of that mortgage paid down, do it. You don't need me to sit here and tell you, yeah, that makes sense. If it makes sense to you, it makes sense. Okay. So that's one of those things. I think Lydia now is set up now to get that portfolio reestablished for sure. So it's really cool to see that work going on. Really cool, savvy investor. I think investing means a lot to her. I would say it means about as much to her as it does to me, maybe more. I don't know. I don't question her level of devotion for sure. I had just had Minds in Motion pop in here as well, who's another one of the channel creators that I've had the pleasure of getting to know just over 2019. If nothing else for me, solidifying the community was my real takeaway from 2019. I really feel humbled. I really feel I'm super stoked for the future on where this community is going to be able to go with the collection and collaboration of ideas, and what it's going to mean, I think, for building personal wealth. Because I think each and every one of us who have made our way in here, um, it's it's quite amazing to see all the wealth building initiatives that have come through the channel. So great to see you pop in here as well. Minds in Motion. That's pretty awesome. Ryan, you're not boring at all. You have a persuasive voice. Um, yeah, you got to be kind of careful with that a little bit. I try to dial it back because I don't know. I just want to make sure. YouTube is tricky because when you put the message across, it's being received by thousands of different people, and you just don't know. I mean, I've got good looking honky who says, should I invest in porn? Right. So those are the types of mentalities that I'm putting the message out there. So for the hundreds of people that are actually taking, listening, deploying, and like, they know I've got my stuff squared away. Right. Um, for all the people who take it and they make it work for themselves, um, then all the power to them. But I just want to make sure that that persuasive voice is pointing people in the right direction. And what I can say is this: I wish I had been pointed in this direction. I really do. My stories about being in hawk with the IRS, not once but twice. Once was because of penny stock trading. The other because of income tax not properly filed. So I've been in hawk with the IRS twice. The first time I had to do one of those tax liquidation. These are things that if you can just avoid, right? And those are things to where when I look at my portfolio now, I'm like, God dang, how the hell am I even here? Like, how did we get here? So for the folks that are in the group here and they're younger than me, some are older, right? Age is extremely relative as far as I'm concerned. I'm more interested in the nature by which you seek out your exposure to the market. What I mean by that is one of the channel creators, excuse me, one of the subscribers to the message, I've known him for 2 years, reached out to me and we were talking, and he was in his early 50s. Okay. We wanted to start something. Boom. We turned that around straight up. And I don't want to get too specific, but I will say this. This member wanted to look at things over here. And by nature of running those things by me and having my persuasive voice look at it in a way over here, same situation. They looked at it this way. I looked at it this way. They were able to look at this through their lens in a different way. There's an infinite number of ways that you can succeed out there. And I got to be honest with you guys, it really comes down to perspective, man. It really does. And I don't prescribe to a lot of the cliche garbage that you need to wake up at 4 a.m. every morning and go pound pavement for 5 miles. You don't need to do that. You don't need to read inspirational books every day. I don't buy into any of that cliche stuff, because here's the thing: what works for me may not freaking work for you. Okay. Find what it is that works for you. Find it. Go look for it. When was the last time you thought about how to make yourself that much more successful in life? Okay. Now, that is something that I think about all the time, all the time. Okay. Because I can't remember a time in my life that I did not um, consider myself successful, whether it be financially, whether it be spiritually, all of which I'm evolving in. Okay. Whether or not be successful in my dietary program, that's the toughest for me, really is. Um, Whether or not it's in my uh, stewardship and application and spending habits, all of which are always under scrutiny by me, always. And the biggest thing that happens to me is I'm not patient enough. So I'm a little bit tougher on myself than most people, which is totally fine. If people do make their way to the message and they do tune in and they're just like, man, okay, straight up, okay, this guy's passionate about this. You're right about that. You're getting the right message if you pick up on that. I just want to make sure that before anybody deploys or takes action upon anything that may have financial consequence, right? Um, the financial consequence piece is the important piece. For example, if we talk Fidelity or Vanguard, there's no harm in starting an account, okay? But if you're looking to take $5,000 and put it into the market, that's a potential consequence action. And that right there is what we need to overly scrutinize there to make sure, okay, to make sure that the consequences of those decisions are fully understood before we make those decisions, okay? Because my motivation is not going to help you there, okay? It's not. Stock market has no emotion. I mean, that's why I typically try to keep the perspective on the stock market in a small box. Okay. The stock market is not going to allow you to get involved next Tuesday and then get on your chariot and ride that chariot off into the sunset toward the sun, toward retirement. Okay. It's not going to happen that way. Okay. It's going to run you through every level of self-doubt. It's going to run you through every level of challenge. You're going to invest in the market and you're going to think for whatever reason it goes down because you invested in it. Okay? And if you think for a second time wrong, try it. It's very, very humbling. So you got to be very, very careful with that perspective. All right. Ryan, going for 3 hours. I could. What's your record? I'll break Matt Money's record tonight. Absolutely. And he's young too. He's 28 years old. He's got years on me, man. Yeah, he just challenged the GOAT to a challenge. Coming on and giving you guys a 2-hour insight to my brain is good enough, because when I say this is just over 5 hours. You got kids? You have a couple kids, Matt. You come talk to me, all right? All right. Good stuff, man. Needs to lose some weight. I hope this Alan Kane hidden some weight. So I hope this works. Yeah, it's tough. That's the toughest part, to be honest with you. I work out like a champion. I really do. But it it's just one of those things, man. Life is good. This is just another aspect of it, so it's important. Are you going to be doing Saturdays live instead of Fridays? Like a K97 hit me up. It's a loyal subscriber to the message. Shout out to K97 for sure. No, we'll be moving it back to Friday. This was a special thing for me. Typically, when I don't throw down on Friday, I will move it to Saturday or Sunday to make sure that I get my opportunity to to offer my thoughts on the market. And like I said, 2 hours for me is a drop in the bucket as far as I'm concerned. I need to have this opportunity um, to come on and offer my comments. I got Alan Kane. He's hitting me pretty funny. I'm just laughing. Yeah. So anyway, let me scroll up here, see if I can't cherry pick some of these. Ryan's a chief. That's no joke. Yep. No joke. Again, I try to keep that affiliation separate, Ben. So, but yeah, no worries. I am a military guy. Hit 15 years this year, so we'll see what shakes, man. Saved my life, actually. No doubt about it. Steve would like to see a collaboration with Ryan Scribner or Graham Stephan in 2020. So I think Graham Stephan is really cool, really cool. I actually think there's a lot of lessons that come out. I don't watch Graham Stephan's videos very often. I don't, and I would pale in his greatness because seemingly probably the most successful, or at least I will be fair and say I was going to say the most successful financial channel on, and probably the most real. I typically don't tune into people that I feel like there's an irk of dishonesty, or even if they feel like they're good and they're just really not that good. I'm not going to name names, but you guys know exactly who I'm talking about. They're just not that good, you know. Um, but yeah, there was a collaboration between those two. It kind of made me cringe a little bit. And I think at the time, Graham was lesser of a channel than financial education. And it was interesting to see Graham just kind of fire right past the million subscriber channel, very successful. And I think a lot of people relate with Graham's message, very polished, very clean. Everything on the message is good. The channel's good. He's got a little bit more of a mix of investing protocol. I don't know if he has a stock portfolio. I don't know. I know he's got some real estate holdings. I know he rents half of his place there in Los Angeles, which is smart. But I think there's a lot. Super enterprising fella and very, very frugal. He's more frugal than me. I think he could probably listen to me a little bit. I would say spend a little bit of that money, bro. It's okay. You're successful. It's okay to, spend it on stock. There you go. Find a good, his last video I think I saw coming through the thread when I was scrolling through was that he saves 99% of his income. Okay. I don't. I don't. I think that's slightly in the pathetic category, to be honest with you. I'm very aware that we're living life, so I'm gonna do it right. That's for sure. So, but yeah, no, Ryan, I actually asked to come on the collaboration. He knows he's got an open invite to the channel. He's super busy now managing that. He's the one featured channel that I do really respect his time, because for me, after hours is the only time that I can do collaborations. For him specifically, that's time away from social media. So I respect that time running a channel with, 500,000 subscribers. He's being pulled in a lot of different directions. And I do respect his time. He knows he can come on here and rap with the group anytime he wants to. I gave him an open invite, and he agreed to come on as well. And that would be the most likely collaboration if I did one. But I'll keep it a secret until that actually happens. I won't advertise that. He'll just pop on and let you know his thoughts on YouTube, and you guys can fire questions at him. It'll be good to get his insight because as far as gaming the algorithm and really having a good handle on YouTube search, leveraging the YouTube opportunity for monetization, he's one of the best, and he's a friend of mine. So, all right. All right. So, stock market doesn't care if it hurts or your feelings. Well said. I couldn't agree more. Matt says, go for Ryan 3 hours. I don't think so. I'm good. Coffee, anyone? Yes. I wish I had started investing sooner. I love learning from those that have skin in the game. I think it gives you credibility, I think. I like the old saying, surround yourself with people who you kind of want to emulate a little bit. And I think that's what this community is all about. I know we have a few clowns that come into the live stream every now and then. There was one a few weeks ago, and I didn't even notice until afterwards. But the strength of this community is so good. Those guys and gals, they get squeezed out anyway, so it doesn't even matter, right? So I don't worry too much about that crap. But absolutely, I do too. I like to talk about those things and learn from them as well. It makes me just as happy to surround myself with that type of activity. So really good. Going to the mailbox as an adult can be terrifying. Laugh out loud. Yes, it can. When will utilities like Duke and Southern dip? I would just be really careful. Duke, in as far as I can remember back, I've covered Duke since it was $37 a share. So however far back you want to go, that's when I started covering Duke. And you just don't get a lot of buying opportunities in those companies. You just don't. And everything's up right now. So you're asking me to say, when's it going to be pulled? It'll probably be pulled down when the market's pulled down. And that's where tracking those good names is in your best interest. Southern Company, it's overvalued. Okay. Duke is one of my favorites. I did put a small position in Duke, but it was a relatively small position aimed at seeking some dividend income in the portfolio, seeked at closing the gap in my utilities sector exposure. Duke was the best name. I would invest in Dominion Energy before I would invest in Southern Company, but those would be the three that I would invest in directly. But I also have the VPU, which is Vanguard's specialty ETF. It's the only one I own in duplicate. So that's how I seek out that exposure there a little bit. But K97, man, I remember when you asked me about 3M, and don't wait till 150. You're not going to get it. Well, I think 3M is really, really coming back nicely. It'll be at 200 shortly. The two dogs that I'm looking at right now, FedEx and IBM, for sure. Those are basing out right now. So we're looking fine there. Pick those up at a good price. I'm satisfied. So, we'll see how that works. All right. Ryan could play in any soap. I appreciate that. That's awesome. I appreciate that. Days of Our Lives. No, I don't think so. I'm too ugly for that. You got to do a video about your penny stock days. I've alluded to it. Man, I was stupid, and I don't know. I don't know if everybody goes through the same deliberation. I don't think so, because I talk to guys like Ryan Scribner, and they're so young and they've got their heads screwed on straight. I didn't. I was crazy, and I was always pretty smart, but sidetracked. Easily distracted. Got caught up in every real estate scam there was, and if you can just avoid all that stuff, you'd be better for it. Just learn how to safely enter the stock market, if there is such a thing. and do so with some level of scale, and you'll be so much better off just to ignore all that other stuff. So anyway, I'm thankful for this community. I couldn't have said it any other way. Cherie, thank you for that. Ryan has perfect demeanor for a live show. And my brother's like, how the hell do you do that, man? Every time I watch the live stream, it's awesome. I typically write like, so to my right, I have a little bit of a whiteboard with 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 words. 10. That's it. And I haven't referred to it one time throughout the entire live stream. It's kind of my trigger words. So if I get stuck here and I go like this, and you guys are like, oh God, Ryan's flatlining. Oh my gosh, he's done. You know, I can look at my trigger words, you know, and be like, let's resuscitate him, bring him back. But oh man, I appreciate it. I enjoy the heck out of it. I love the discussion. And when I pick up on little things from the comments that come through, that's what triggers different stories about where I go with the live stream. But it's all meant to deliberate over the same topic. Let these new investors understand what we're talking about when we're going through the deliberation. And once you go through it, it's not like you're done going through it. I'm always reviewing. I reviewed my portfolio before I came on tonight, just took a review on it. The new position this week was BCE for all you dividend lovers out there. BCE is the Canadian number one telecom company. So telecom provider, as well as a couple of network owners up there in the greater Quebec, Montreal, the Western Coast, and then all of Canada proper. So pretty exciting there. I think it yields over 5%. So really good dividend play there, a play on 5G as well. I did sell Oran in the other smaller portfolio. I haven't done a first trade review, but consolidated that portfolio a little bit to the 3 ETFs. I was glad to do that. Eventually, I do foresee bringing that portfolio home and roping that into my taxable account in due time. So that's what I'll do when I end up consolidating the accounts. Okay. But thank you for that, Ryan. I appreciate that. I really do. Rough and raw and uncut. Perfect demeanor, if that's what you call it. So Ryan's voice and mannerisms are very similar to my uncle's. That's cool, man. Thank you. Matt Money, he's trying to sweeten me up to get that better bottle for sure. I've already got one in mind, man, for sure. Just hard to find. It's really hard to find. Hope you like bourbon, because that's my thing. You bet. Man, legit. Currently 60% through another all of a life is good. Awesome. TD is great. I really love the features. So yeah, that was a recent changeover from Robinhood. I was really glad to see that. I can't believe for every person that comes on and declares that they've switched out of those discount brokers, there's 100 people who come on and they're like, I love it. It's the greatest thing ever. I'm not sure if I share in that sentiment. Again, if there's new investors out there that are coming on to the independent investor channel, I'm going to give you this rock solid advice. I'm going to say it. Okay. Can't give financial advice, but what I'm going to give you advice on is this. So listen up close. If you don't have an account with any of the major brokers, do yourself a favor. Why don't you look at starting that with one of the major brokers? TD Ameritrade, Fidelity, Merrill, which they are one. That's who I use. I'm an advocate of them, or Charles Schwab. Okay, those are the four that I put on that high list. Now, if there's an alibi in the group that I'm missing, and you're a new subscriber to the group, I just had one of my brand new kids to the coast to my work. I just talked to him this week. I'm like, who'd you go with your broker? And he's like, Fidelity. And I was like, what? How'd you know that? How'd you know to do that? I was like, well, I did my research. So do yourself a favor. I think that would be something that I think you could set up and be happy with for the rest of your life. And that's a real big takeaway for anybody that's getting started in the market. that can consolidate their options down to 4. All you got to do is cross compare. Very simple. Google it, do a cross comparison, and take a look at. Aside from that, the aesthetics are really good on all of the platforms. Okay, so really good stuff. A cigar shop can also open in Thailand. Ryan, do you still own GE? I can't say that I do. I sold GE. I took it all the way down into the deep 580 range, etc. And I actually added more. I averaged down more in GE, I think 3 times than I've ever done in any other stock. I think 3 times, which 2 times is too many for me. It's just what I don't feel comfortable doing. But I don't own General Electric anymore. I was able to average down enough to where when it turned back north to 10, I was able to double my money, get up to a point where I was able to break even in the position. And that's what I did. I went ahead and parlayed the position. And I think I leveraged those into Honeywell, I believe is what I did. I think that was around the time where I was able to take some of those renderings from General Electric, because at the time, I actually got pretty exposed to it, averaging down, which again I did not like to do, but that's what I did, and worked out fine. We ended up kind of doubling our money, made a nice trading profit from 580 to 10, and just all around a bad investment, to be honest with you. And I didn't really see any benefit to sitting around and watching General Electric try to find its way. No way, it's fine. Sometimes you got to cut losses. And I've done that a couple times. When I say cut losses, I was still pretty patient with the position, but that's what I did. So we're not owners of General Electric anymore, and I'm okay with that. I really am. That was a fun ride. Swing, I'm adding another 1,000 right on. That's cool. Don't get too crazy with this market. I've never seen it like this. It's pretty wild. You need some moderators in the live stream. I concur. This product has evolved over time, that allowing the collaborators, and I'm talking to Minds in Motion right now. I really need you to come on and sit with me one of these Fridays. I really do. I'd love to have you on the channel. I really want your insights, and just talk plainly to the group about what investing means to you and why you do it. I think it'd be a lot of fun. I will open that up opportunity again this Saturday, being kind of jacked up with the schedule. I figured I would come on and just run the live stream myself, which tonight's been pretty darn awesome. I appreciate the opportunity as usual. You should share with all your family. His message is for everyone. Absolutely. And it's amazing too. I probably get more loyalty from some of the community members in this group than I do with my friends. Because I don't know what it is about friends and coming back and saying, hey, take a look at this. I'm sure they'll remind me, hey, thanks for keeping us in mind, Ryan, but it's like, dude, you know what I do. You want to freaking know this stuff, ask me. Don't it's frustrating for me sometimes how I get, honestly, more sincere loyalty from this community than I do from my friends. which the older I get, I have a unique perspective on that as well. But yeah, it is for everyone. The principles that we talk about they're applicable now. They really are. It's just that the landscape has changed so radically within the last year, that we do need to stay flexible and dynamic in the opportunities that are made available through investing now, all of which are good. They're all good, except for the stock market itself, maybe potentially becoming a little overextended, which I feel like potentially may scare some new investors off of the market if they start to see it, tumble, and you've got people who were overexposed or over levered or under tempered for the market overreact and panic their way out of the market. And that's at a dull roar right now. I don't hear any of that activity going on. Trust me, you will. You will. You watch. You watch. When this market starts to kick up volatility, it's as if they do a regime change on the news and they bring in every bear that they've ever had on retainer, and they'll bring them on and they'll talk about the doom and gloom in the stock market and how big it sucks. And it changes in like a day. It's amazing. The trick is to drown out that noise. Okay. Remember, you're not doing this to please CNBC. You're doing this to please yourself. Okay. And don't be surprised when your investments act like invested dollars. The key is to take a deliberate approach when you're seeking your exposure to the market and adjust accordingly. Okay. Don't be surprised when that stuff happens, especially for the dividend investor group. The dividend investor group knows how much opportunity is going to be provided during those times, because to cross compare the two, right now, the market, the passive investors are killing the dividend people. They're killing them. They really are. Sorry, guys. You know it to be true. Okay. Um, but that doesn't hold true in a down market. See, because then the dividend investors are going to come back and say, hold on a second, man, valuations are coming down, which now even the valuations on dividends are being stretched. Interest rates are so low, right? Where's everybody flocking? Everybody's flocking to Duke and Southern and Pepsi and Coke and all these awesome dividend aristocrats and kings, because it's a better option than bonds are right now, which unfortunately is elevating prices, yada, yada. All the dividend investors know exactly what I'm talking about. So unfortunately, that's why I hit Gen X up earlier and I was like, where's the value here, man? I mean, are we really expected to be paying, 27, 25, low 20s times earnings PE ratio? And that's just, anything over a 20, you should be kind of careful. Sector specific, of course. But yeah, I don't know. Valuations are getting a little bit stretched right now, so I'd want to be a little bit careful. But right now, the market folks, the passive investors, are killing the dividend investors. But over time, that'll change as the market goes down. The dividend portfolios tend to be a little bit more insulated. Well, they are. Especially for those passive investors that own like a VOO, for example, you're going to see a little bit more violent swing in that, where you enjoyed appreciation to the upside because 30% of your VOO is tied to the high flying tech stocks on the upper end of VOO, right? Those dividend portfolios with 10, 15, 20, 25 names in it are going to continue to pay those dividends through a downturn, even, might I say, a recession. Okay. So just something to kind of keep in mind when we're looking to prepare whatever style it is that you're deploying right now. You just have to make sure and look forward to it to say, look, if it goes down, I'm going to freaking buy more. It's pretty simple. And it's the same philosophy for both. It really is. So, Matt Money, we're going to open a cigar shop and have financial talks with people. I think I would go one further. Maybe just have a cigar room in like a coffee shop, internet cyber cafe type with a YouTube theme to it. I think that would be kind of a cool thing, like a fusion coffee shop. I think that'd be kind of cool. But I've got some really good ideas. You guys should talk to me offline about some of my wild ideas about revolutionizing the club industry. And yeah, we could do some fun stuff for sure. Got to make that money first, all right? Then we can deploy all of our world-changing ideas, okay? But that's a good one. Some people just look in the yield, and that's scary. Yeah, I asked Gen X about this tonight, actually, and I do feel like there's some of that going on, all right? If you're just investing based on the yield, I think you're going to find, and I'm not going to tell you you're investing wrong, okay? That's just stupid of me to do. It's rude, quite frankly. But here's the thing. If you're investing as a dividend investor, there's a chance that you could go through multiple years and underperform the market. That's not why you're dividend investing. I think that investing in dividend stocks really, really is conducive to those folks that can heavily fund those accounts or come in with a big capital base and really put that money to work earning dividends, okay, as opposed to organically growing a portfolio from scratch using the dividend strategy. All right. So if you heard me out, this is why I typically revolve around new investors seeking out more of a passive approach when they start. Okay. Seek out compounding growth. Okay. You're not seeking out compounding growth per se with dividend investing. You are to an extent, but not to the extent that requires any type of work. Okay. If you're going to be a dividend investor, you got to work for it because you got to get those good entry prices on those. And those are tough to get right now. They really are. AT&T at 32 would have been good. 3M at 155 would have been good. AbbVie at 56 would have been good. I can go on and on and on, guys, right? J&J is okay right here. J&J is fine. BCE is a little less than fair valued. We're good there. I think there's some good opportunity in telecom across the board. I really do. But you see my point, okay? Buying AT&T right here at 38 bucks, unless it fits for you and you're going after that pure play dividend, okay, then it works for you. But if you're looking to be a starting investor and you're going to put all your eggs into an AT&T basket, you may be setting yourself up for a little bit of disappointment when I think your goal should be going after that diversified capital appreciation, yes, but compounding growth, making sure that that initial base of those dollars has the potential to really accumulate and take that compounding growth into the future. From a total market perspective, that's just a philosophy, right, wrong, or indifferent. That's what I'm saying. But one thing you'll notice about myself, Matt Money, Gen X dividend investor, Joe Carlson, all of us have something in common. All of us. All right. And I'm going to accuse all of us of the same thing. And that is investing aggressively, dollar cost averaging aggressively. Yes, check. We all have a pretty good amount of capital. Check, right? Me personally, I don't deploy a dividend investing strategy exclusively. Okay. So I'll take myself off the hook a little bit. However, I do fit into the same category as these guys in that working with a little bit larger capital than that which would be represented by a new investor. Okay. So if you're a new investor with $1,000, $5,000, whatever it may be, just make sure that that's the strategy that you want to deploy for yourself. It can be extremely rewarding, but there will be a few more requirements of you as an investor. Okay. And all these folks would agree with me on this. You're going to have a little bit higher risk tolerance than passive investing. That's for sure. You may potentially have to go through years of underperformance only to realize that outperformance, because the potential to outperform the market exists within quality dividend investing. Okay. You can outpace the market. You can outpace the market by having a couple laggards in the portfolio. That's totally fine too. But be realistic about those years that you're underperforming and continuing to monitor your account, fund those good names that you know are going to outperform over time. And eventually they will work for you, but you've got to have some tolerance to go through years of swoons. Okay. That's just what it takes. It takes a little bit. You got to be a little bit tougher. Okay. Be a little bit tougher. And the rewards will be there for you if you're willing to take that level of chance with that single stock mentality. I know there's different schools of thought when we're talking about these two styles. And what I said at the top of the live stream, I think those two styles of investing are the most optimal ways of seeking out your exposure to the market. Neither one of them perfect. Neither one of them. No way. There's going to be different schools of thought. Professional money managers go back and forth all the time deliberating on this very thing. What does that mean for you as a new investor? As a new investor, it just means that you have somewhat of a choice to make. Okay. If you feel like you've got a tolerance and a little bit of an understanding of the game and feeling like, you really do have a better opportunity based on some of your other existing accounts potentially to start a dividend investing track, then by all means do that. You can succeed with it. Okay. It's just going to require a little bit more work on your side of the house. And if you're willing to go through that work, the rewards are probably a little bit more lucrative on the other side of the house. But remember what I said, you got to be willing to put in the work. You really do. Not that much, but it's going to require some work to make sure that you're getting those good entry points on those good dividend payers. Okay. Super important. All right. Good stuff. I'm cruising up here, make sure not being a wage slave is good enough to me. Yeah, I guess I'm kind of trying to speak to some of those wage slaves as well. I know there's a lot of people who talk about the time value of money, etc. The misery of the whole thing is that a lot of people are working those jobs to make ends meet. And I don't want to exclude the opportunity in the stock market. There's been a ton of people who've come to the channel who don't have a lot of money, but they're hungry. And the opportunity to get involved in the market should be just as available for those people. And I would contend that it's going to be harder for them to seek out their opportunity, yes. But I would contend that those are the very, very people that need to seek out the investing opportunity to really try to break out of that rut, to try to break out of that time value of money trap where they're working for that money, hard-earned money, and that money goes right to outflows right away. Those are the people that if they can inject this, that's why it's so important for us to deliver as crystal clear of a message as we possibly can to make sure that for dollar, if those folks that are making, 16, $18,000 a year, yeah, they're freaking out there, guys. So those folks that are making that money and they want to take that little bit of extra money, and their goal's not to become a millionaire. Their goal is to maybe have 80, 100 grand when they retire put away. That'll be the hardest 80 to $100,000 me and you ever make, right? But we want to make sure that we're reaching those people too. You betcha. And is this message for those people? Yeah, it is. It is. Not a hypocrite. I've been there, done that. All right. I've worked those wages. There was a time in my life when I was, in fact, a janitor. First time on the channel that I've ever admitted that. And I was proud to do it. I was happy. I didn't have any money, didn't have a care in the world. I was in love. So that helped. Right before I got married, right before I joined the military. But I was a janitor. That was the last job I took, trading that time for money, getting that paycheck, right? And then took on my salary job, and the rest is history. I've been able to leverage the opportunity of that dependable salary. Um, and there's some downfalls to it too, because I work really, really hard, and probably I'm at least earning my salary for sure. But yeah, I mean, we want to make sure that we're reaching those people too who really sit back and they listen and they're like, man, is this guy for real? Can I really do this with 20 bucks? Yeah, yep, you sure can. You sure can. And we want to make sure that the message is clean for those people so they can get a hold of those assets that can really work for them, really work. All right. All right. So is it on sale for 40% off and you aren't buying? My name is Steve Rogers. So it's on sale for 40%. I think you guys are talking to more up top here. 8% loss a year with a 6.5 annual dividend doesn't seem like a really good holding. So you guys got a hold. I've got Luna's channel. Thanks for the great advice. You're welcome. I would like to consider it more, I guess, a conversation. But if you are a channel creator, certainly keep in mind the collaboration. When I do come out with those, if you're not subscribed to the channel, which I assume that you are, please keep your mind open to the opportunity to come on and sit with me on a Friday live stream. Okay, it's a super cool opportunity, one of which that I can't stress enough. If you guys are looking to establish yourself as a channel creator, okay, which I'm still in that camp, but with 20,000 subscribers, we reach a wider range of audience. So if you're starting, if you have a big channel, I would love to have the opportunity for you to come on. If you have a small channel, why not come on and have a chance to introduce yourself, man? No judgment. This is investing is not one of those places where you need to be looking and saying, hey, my style's better than yours. I just appreciate everybody's perspective about where they're coming from. And I'm looking to evolve in my understanding about some of those different strategies as well. So I would definitely extend that olive branch to you as well. You'd be welcome on to the collaboration. Just jump into the StreamYard when I do have that going. That will be next Friday. We will have that opportunity. So I'd love to hear what you have to say. And maybe you can reach out and reach some of the investors that we're looking to, you know, inform on the benefits of investing in the market. So we're going on a couple hours anyway, guys. I'm going to continue to monitor through some of the thread here. Golden learned that hard way. I gained a few pounds. Yeah, I know, it was the holidays. Guys, we need to focus on fitness and health also while investing. So I'm not sure if that is, I think that's a really awesome comment. I really do. And I talk about this every now and then. I could talk about fitness and diet and my favorite smoothie, just like I talk about investing. Seriously. So it's super, super important that we understand that if we're investing for our future, we need to be around in our future. So, you know, you don't come on here for a lecture, that's for sure. But if you do, in fact, are a smoker, why don't you do yourself a favor and quit? And I'm not a hypocrite. I used to do it. I quit. One of the few. And I always look back on that time of my life, and that's one of the regrets, I guess, when you look back and you say, "Man, I did that." Yeah, I did. And you just can't believe that you ever did it. And when you're doing it, you're like, how the hell am I ever going to stop this? Yeah. And that's the cool thing about when I talk about incorporating investing in your life. And I talk about incorporating a workout program in your life. That's what I'm talking about. Where some of those things used to be incorporated in my life, where I used to have a meal and I used to wake up in the morning and, you know, it's like it's part of your life and it's like you think you have to have it. Nah, just substitute that stuff for all the stuff that's going to help you stick around for a while. Because if it were up to me and it were up to the rest of this community, we'd like to keep you around as well. So really cool comment. Golden Boy 88, man. I like that. That's legit. It just speaks to the broader perspective that we're trying to push out through this message, a little bit more holistic. So it's not so one tracked and people don't just come onto the message and they're like, okay, yeah, whoop-de freaking do, talking about stock and why do we do it? You know, seek out those answers for yourself. So pretty cool. Done did watched it. What is so good about Ford? Interesting. I looked at Ford briefly. I didn't like it at all. There's no way that I would invest. I don't like the union aspect of it. If I was going to say one bad thing about Ford, that's who's making all the money is the unions. It's not stockholders. Unions, man. They got a grip on everything, man. I own Altria, but don't smoke cigs. Yeah. I'll have you guys know I took trading profit in Philip Morris. I hit the 10% mark. I'm good. I'm out. Philip Morris, I'm gone. It'll probably go up to 100. That's fine. I'm cool with it. I'm out. I don't like the headwinds surrounding it. I took it in trading position, took my 10%. I'm out. So good to go. Own both, drink Diet Coke, eat Cheetos, Doritos out loud. Come on, Gen X, man. I have this vision of who Gen X is, and you just ruined part of that. I'm just kidding. No, man. Good stuff. Whatever. At least I'm buying a vehicle from a company I do own stock with. Nice. Probably talking about Tesla, I would imagine. Anyway. Oh no, Ford. Yeah. Now the vehicles are awesome. I like the Mustang. I like the F-150. I just think they're overpriced, and they have to overprice them to again pay the unions. So anyway, yeah, I've never really been an auto investor. I mean, I would say the closest to that particular line of thinking is Caterpillar, which does float my boat. And I'd be more interested in buying John Deere than I would any of the autos, to be quite honest with you. Talk about the first good stuff. So I'm going to start to wrap it up, guys. I think I got to most of the, there's just so many comments here. It's really difficult to get to. I do apologize if I skipped over for somebody. Health is number one for sure. I'm in investor, not next Friday, but another. That's cool. So Heru P says that he'd like to pop in. That's awesome. I mean, it's an open invitation, straight up. Really is. And you guys will find that I'm open to that. I enjoy the heck out of it. I enjoy this more because I get to talk the whole time and I've got a lot to say. And I just want to make sure when we're doing the collaborations, it sometimes gets a little bit back and forth. And I want to make sure that we're still continuing to focus in on those investors, the bulk of investors that don't have any skin in the game at all, and they're just looking for credible information. And I want to make sure that we're speaking to those people. And I think if I were to tune into this live stream tonight, and I had the opportunity to sit and really listen to what I was saying, I give my best effort. I don't promise perfection, but what I do promise, I do believe we deliver on absolutely. So anyway, guys, with that said, I think I will go ahead and sign off and enjoy the rest of my Saturday night. Somebody said the free UFC fights are on tonight. I don't know if McGregor's fighting tonight, but I'm all about that. I'd be half tempted to take my wife to B-dubs right now and catch it, but I'm going to chill out. It's been a pretty busy week. Continue to monitor the market, certainly. Starting to take a little bit of trim profits. I've declared some of those to you guys tonight. I'm about 70, 20, 10 on allocation right now, 70 equities, 20% in fixed or in cash, and 10% in fixed income. So 70, 20, 10 is the allocation. Out of the 70 in equities right now, we're still sitting at about 25, 75, 25 being passive, 75 being the dividend strategy, which is absolutely perfect for what type of investor I am. I think if there was any takeaway from tonight's live stream, I would highly encourage you guys, if you're a new investor and you're making your way to this community for the first time, congratulations. Okay. I absolutely do believe that you found the finest niche on YouTube. And I don't say that without any hesitation. And I don't say it with any disrespect at all. I don't mean it that way at all. But congratulations, because you found your way to a community of a lot of different styles. You get to consume your content in a way that's probably conducive to the new generation of how you're going to consume information with regard to the stock market. Okay. The stock market, in and of itself, has been around for 100 years. Okay. There's not going to be a whole heck of a lot that changes about the stock market in general. What's radically changed is the abilities of individual investors to seek out their exposure to the stock market. And it's never been a better time to be an investor. I say that now, and we've got some really, really concrete reasons as to how that is available now to new investors. All right, free access to the market. Some of the very best full service brokers have had some time to really iron out the services that they provide with regard to data and analytics through their platform. It's really the main source of my information. So if you're looking to seek out that broker opportunity and take that first step into the investing world, it'll cost you nothing. Take that first step and become part of the movement that we're working here on the channel. I want to thank all the channel creators for making their way in here. Specifically, I also want to thank the subscribers that make their way on. I want to thank Brandon as well, who was kind enough to come on and kind of volunteer that situation. So I kind of used that as a scenario to discuss some of the deliberation that you should go through as a new investor as well. So I want to thank you as well. Hopefully we hit the mark. All right. The power of the information is defined by the amount of impact, real results that we're making for real people and real investors. With that, guys, I'll sign off and we'll catch you next Friday. Please stay tuned. Please look for the thumbnail that I post midweek. We'll be doing a collaboration as well next Friday. If nobody wants to come and sit the chair with me, that's no problem. I'll run it by myself. But I would encourage you guys, if you haven't come on and sought out the opportunity to help me on that Friday collaboration, it helps me give a very good, enjoyable break, not only to me, but it changes up the delivery and the dynamic a little bit on making sure that we're reaching as many people as we possibly can. So guys, enjoy the rest of your weekend. Happy Martin Luther King Day on Monday. Absolutely. Enjoy yourself, and I'll catch you next Friday. Take it easy.